Okay, quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you join our most popular tier, which is tier 2, you will get access to the public Discord with multiple channels covering dozens of subjects. You can ask me anything you like on there. There's a dedicated channel for that. You can make chart requests. You can even ask to have certain assets covered in the weekly live streams, and the weekly live streams are one of the benefits. These go on for several hours, between 3 and 5 hours, normally hosted on a Friday, but I always timestamp them so you can come back and watch them at any time you like at your leisure. You also get access to all of my educational content, including the Elliott Wave series, trading series, technical analysis series. So there's an awful lot of value here for just £10 a month. It's an absolute bargain, to be honest with you. And then if you want a little bit more than that, you can pay £15 a month. You get everything I just previously mentioned, but you also get the exclusive monthly dividend calendar and stock rating system, and the video which comes along to support that, which we recently just got posted up for our tier 3s here. As you can see, top dividend stock picks for the month January 2023, 32 stocks listed, 16 ex-dividends for the month, with the calendar and stock rating system posted here as PDFs below. We can see a recent live stream, then we can see our economic indicators monthly review, where we went over housing, permit starts, completions, Institute of Supply Management report on manufacturing, report on business, manufacturing, consumer surveys, yield curve, blah blah blah. So there's a lot of extra content I pump out for the Patreon. It's not just educational videos, which you can now access the 16 video long Elliott Wave series, but it's also monthly data that I release only to my patrons, and it's also extra support for tier 3s as well. So please consider joining. It really is excellent value. Thank you very much for listening. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're going to be looking at XRP for a few minutes. Should be a short one today. Essentially, we've had an impulsive move off of the recent low. It looks like an impulse wave. We've got a bullish candle on the daily time frame. May prove to be a bullish weekly or perhaps even a bullish monthly candle. Eventually, we've come back to a major support level and we've bounced from it again. Will it hold or will we go lower? Well, who knows, but I just thought it of interest to point out some of the confluence that I've noticed in this region. So, first things first, I want to cover some basic support and resistance. Right, so we've come back to 0.30200. That's where we've come back to. Now, if we look at, we've had prior support here, prior resistance here, prior resistance, prior resistance, prior resistance, prior support, and prior resistance going all the way back to 2017. Projected in time forward. This is a major prior resistance and therefore support level, and we've come back to it and we've bounced pretty violently over the shorter term, putting in a very bullish candle. So back to a major level around 30 cents. Okay, if we then look at the Fibonacci retracement in our Fibs folder here, and we take a look at it in log, we've come back to the golden zone from this swing low to swing high. This is the March 20 low, this is the April 21 high, this is the retracement since. We've come back to the golden zone, 618 to 65, and we've fallen into that prior support zone. Okay, we've come back into some thicker trading. We can see here, still a long way from our point of control. If we come down deeper, we could always look for that as a level of support as well, if we were to collapse from here. This is also a 90% retracement, or I use the 89 because it's a fib number, and that's here as well. You can see we don't want to body any candles below this. We've got a few wicks down, but we don't want to body any candles below it. Okay, we can see how that coincides, this level here, with that support that we were talking about, with that golden zone retracement in log. So there's a bunch of confluence here, and yeah, that's basically why we turned around so quickly. Of course, if you're focused more on the fundamental reasons, and I'm sure you've probably got some kind of media story you can believe as to why that happened, but that's why it happened. We came back to a major level, tried to break through it, immediately sellers got exhausted and immediately found a bid down here, okay, at a major support. Doesn't mean it's going to hold, but it is a major support. One of the little interesting piece of two other interesting pieces of geometry that I'm working with here. One is an inverse fib channel. So instead of this being 100 and this being 0 and this being how much we've retraced, with 50 being in the middle going down to 23.6 and this being 61.8 and so on and so forth. We've flipped it on its head. Now let me show you why. It just adds a little bit of an interesting feature. What we see here is some pretty significant play within these levels. So take for example the 78.6 here. We get a perfect tag here, a tag here, a tag here. Let's look at the 61.8. Resistance, 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 support, 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 resistance, 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 and support, support, support. Straight on the golden zone, right in amongst our fibs. Okay, the 89% and the 61% retracement, right in amongst our support. Okay, I just find it intriguing is all. And then we can also see the 65 operating as support as well, and resistance through certain areas. Let's just turn that off. So we actually traded in that zone here for a little while with the 65 also operating as support and resistance. And we can see that we roughly came down, I say roughly, giving a benefit of the doubt, roughly came down to the 50 as well, at the extreme here. So I'm not saying this is a legit piece of technical analysis, it's just a curiosity, and always trying to find why we're trading at certain levels. Things aren't always perfectly horizontal, sometimes they're slightly diagonal. You know, we can see levels that we're trading at, and if we can find some kind of consistent projection for those levels that makes sense, by all means add it to the chart as a further piece of technical confluence. But there we go. We've come back to those major fib levels. We've come back to that major support and resistance, and we've come back into this little inverse fib channel that I've got going on here as well. Okay, and I mentioned one other piece of geometry. Now this is something I placed on the chart a long time ago, and I did it purely by trying to line up the peaks and the bottoms, the tops and the bottoms as best as I could with the various fib levels within it. But it was a large long-term pitchfork. Now I don't have the luxury of being able to place it on a primary pivot back here somewhere and projecting there to there forward in time as a pitchfork. So what I try to do is line it up as best as I can, just as a piece, just as a way of channeling what's on the chart. So let's bring that up. Now what I find interesting here, and like I said, I haven't touched this. Members on the channel on the Patreon may remember me looking at this several months ago. We can see tags all over the place on this thing. 23.6 median line, 23.6, 23.6, 61.8, 50 to the tick, 78 to the tick, 23.6, 50, a little messy, median line, 23.6, 50, trading in a channel here. There's a 61.8 test, back to the median line, gets a little choppy, perfect test of a 38.2, perfect back test of the 38.2, 1, 2, 3, 4 points of contact, then down to the 78.6 to this wick, then down to the 89, then down to the 89, then back up, then down right to the edge of the pitchfork. Right to the edge of it. Okay, and then a little bounce. Now, this doesn't have to mean anything, we all know that, right? The algos are just trading from multiple different sources of support and resistance, multiple levels of confluence with volume. So it's a case of, if there's a reason for there to be support somewhere, there likely will be. Okay, it's just the technical nature of these cryptos, and I think the constitution of the market behind them being so, a lot of people would say bots, but whatever you want to call them, we're talking, you know, no algorithm driven trading a lot of the time. So moving in and out of these technical levels, as well as long-term support and resistance, as well as Fibonacci retracement levels, you just see it very, very frequently. So there's another little piece of geometry. I wouldn't put too much into it, but it's long-term edge of the pitchfork here, long-term support and resistance, you know, long-term inverse fib relationship at the 61.8 and the golden zone, long-term Fibonacci retracement to the 89 and the 61.8. And it all comes into here, at 30 cents after this long move to here. So this is either 1-2 or 1-2, or this is some kind of sideways pattern. You know, I guess. I mean, I don't really want to speculate on what. It could only really be one thing in the long term, couldn't it? That we all know. But in terms of if this whole thing was a sideways pattern, it could be a deeper correction which breaks all of these confluences. Okay, that's definitely possible. Or it could be 1-2, 1-2, and off we go in the 3. Okay, or maybe it could be A, B, C, D, E over the long term. Who knows? But it's not a count I subscribe to, it being a giant triangle, because it doesn't fit the longer term count. But either way, I just think all of that confluence is a little interesting. So now that we've gone over that, how about we come in and have a look at the count. Now, I'm focusing more on the classical analysis here with XRP than I have recently on other assets, is because it's just a real pig. It's really ugly in terms of making sense of it. So, getting up to the high, we have an expanding, leading diagonal into the 1 here. So we've gone 1, 2, 3, 4, 5. 4 doesn't quite come back beyond the bottom of the 2, so it is legal. Does retrace into the wave 1. 4 is deeper than 2. 3 is longer than 1. 5 is longer than 3. Right? 3 points of contact. 1 to find 3 to find 5. It comes up here. We don't get a throw over. We don't get the more typical underthrow unless we have a truncation at the top here with this high, in which case it would be, and this is 3, 4, 5. I don't think that's the case, because I think this is an ABC, and we can clearly see 1, 2, 3, 4, 5 in this single move up, but it could be a little truncation into a high, and that would fall short of that upper band, and therefore look more typically like the failure of an expanding leading diagonal, where the 5th tends to fall short of that trend line. But it doesn't have to fall short of that trend line. It can overthrow, just like we might get a throw over in and out, a more typical contracting diagonal. Either way, if we come off of candle for a minute and we just get rid of that extreme wick and take the bottom of the 4, we can see that we do come into price 1 territory, okay, and we do not get anywhere near invalidating wave 2 bottom. It's just that huge wick on the candle wicks down and threatens to do it, but I've measured it and it's within a gnat's ass of not doing it. Okay, from there, getting down is a headache. Now, like I said, we've got those 2 fibs right here in this area here. So it's more about what we want to see happen than it is about trying to make sense of the short-term count in a bullish way. I do have an explanation for it, but I think it might well be bullshit. Okay, so I'm focused more on what the price does than I am on the Elliott wave at the moment. Now, using a shift pitchfork based off of these 3 points of contact, this first pivot, swing low, swing high, and then we stay in a sequence of lower high, low, lower high, lower low, lower high, and we've yet to make another lower low. We got close with this wick down, but we didn't make it. Now we can see the trend between these levels here is very strong. Right, once again, a lot of technical trading going on between 61.8 as resistance, frequently showing up. We've got the 23.6 often shows up here either side of the median line. We've got a median line check here. We've got the 38.2 operating as resistance and the 61.8 operating as support. Edge of the pitchfork, 61.8 into the 30, back to the 61.8, pop to the 38.2 on the upside. Median line, down to the median line, down through the median line to this 38.2, back up to the median line, median line, median line, median line, median line, 23.6, up, down to the 38.2 again, back up. So you can see that this shift pitchfork is playing out really quite nicely. In the simplest sense of things, if we're going to believe that this long-term downward trend is over, we want to see this thing just break completely and cease to provide any form of resistance. Now that's a huge move back up towards $1. We probably clear it depending on the time frame, somewhere around 60 cents. It may be later than that, maybe sooner than that. If we came straight up, it would be later. If we came back, it would be if we came up, it would be sooner, and therefore higher, and vice versa if it was later. So we're still in this resistance. Now we've got a more typical we can point to a downward trend, good old-fashioned trend line here. We can't quite get right to the top and get as many of these lows, highs synced up as possible, but that's pretty accurate. 1, 2, 3, 4, 5. Okay, so we're still in this clear downward trend. We want to break these prior levels because this is going to be major resistance. Okay, at 51 cents. But we need to break this sequence of low, high, lower low, lower high, lower low, so on and so forth. We need to turn this trend around and looking for a break of that pitchfork. Okay, now real confirmation isn't going to come until we clear this internal correction here, which is all the way back at $1.41. At that point, having this as a swing to here, then a swing to here, cancels out any move back above this, the continuation of the swing which began from this high. Right, we can say the lows in now. Obviously we don't want to wait for that, that's going to take forever, and it still doesn't mean that we can't be dealing with free and potentially free to a new high. Alright, so that's all bridges to cross in the future. What I really want to see in the shorter term is an end to this downward trend. I want to see a local dominant high get taken out. Right, so the high here at 0.55829. Let's put that on the chart. 0.55829. Okay, get above this, and we've ended this. This is no longer another lower high. Right, we've cancelled that out and we've set a temporary higher high, and then looking for at that point a higher low, and for the upward trend to start to continue higher. At the moment we have one swing high, one swing low. That would be 3 swings, that could still be corrective. 4 and 5 swings would make it a larger impulse, and then we're seriously taking out the downtrend at that point, and it becomes much more likely that we bottomed here. But that doesn't mean that we can't trade it on a smaller time frame. So now let's come in and have a little focus on the super short term here. And we're going to come down to the hourly chart. In fact, we're going to come down less than that. We're going to come down to the 30-minute chart. So what are we dealing with here? Well, if we just get rid of that annoying wick for the moment, okay, because it's absolutely huge. Even with it, we can see, excuse me, we can still see 1, 2, 3, 4 and 5, potentially 5 waves up. Right, clearer to see, I would argue, and some extension there as well. I would argue you can see with 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5, like that. So 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5. You could even do it like that. Either way, we've got 5 waves up. Could argue maybe that it's 3 with a shorter C, but we could just say it looks like an impulse. Right. So from here, we're looking to retrace. Now, if we take the wick, come off of log for a moment, run it up, you can see how so far we haven't really retraced all that much. Right, gone through the 23.6, gone to the 38.2. If we switch off of that and come to the line chart for a moment, just because that wick's so extreme, go into linear for a moment, we've come back to the 50. We're not quite back at the 61.8, and we appear, for the most part, with this being 3 swings rather than 5, being broken up into 3, suggests to me that this is corrective, and therefore there is going to be at least an accompanying third wave higher for an ABC, or a 1, 2 into 1, 2 into 3. So there's a trade here even on the shorter term, long before we have to wait for all of the other things I was talking about. So looking for what we would be looking for STS setup for our members is basically 5 up, 3 back into the value zone, which we would be entering between the 50 and the 61.8. You could take it from the 38.2, but we're looking for another move up and back to enter off of. Now, there's nothing wrong with just buying the 50 as a pivot and have an arbitrary stop below it. There's nothing wrong with buying the golden zone and having an arbitrary stop below it if you want to front run it. That's fine. If you want to wait for a little bit more, so the previous trend looking like it's continuing on a smaller wave degree, you can tighten up that margin of risk with a tighter stop and then move on from there. So there's a shorter term play here. You don't have to wait for the long term to come around to you. So 5 waves up, potentially 3 waves back, potential bottom at major support, major resistance. Alright. Volume came in here at the low. It wasn't by any means the strongest we've seen in the history of the trading for XRP. However, if we look at just how thin, it was crazy how thin trading was getting prior to this. Then we have that big flush down. Volume comes in to support this move off of the low. At each of the major peaks within the waves, volume increases. This is a strong move off of the low. It's not massive in terms of volume relative, like I said, on the larger time frame, but on this time frame we can see volume came in to support this move off of the low. Volume is declining during this move back, suggesting this was impulsive, this is corrective. A into B, 1 into 2. Okay, so there's likely to be a counter, there's likely to be a continuation of this reversal, this trend, this shift back to the high, at least for 3 waves, probably, maybe, hopefully, we could say for 5. So there you go, that's the shorter term time frame, little idea for a trade there, nice and simple. In terms of the actual Elliott wave count, I'm not going to waste too much time here because it's just a bitch, and I have just had to create an absolute mess, but we'll go over it before we leave anyway. So getting down from this expanding leading diag, we have this. Okay, so we're just going to come down to the 8 hour to see the extra little bit of detail we've got in here. That needs to go out of the way. So right, like I said, it's not beautiful, it's the best I've got. Intermediate 1 into intermediate 2. We've done cycle 1 on a larger time frame. We've done cycle 2 on a larger time frame. We're doing intermediate 1, 2. Okay. And we've got A, B, C into minor W. A, B, 5 minuet waves in a C to get a flat for the X. Okay, and then we've got a zigzag, and it's a zigzag. There's just no arguing that it isn't. Okay, and a zigzag, and a zigzag, and a zigzag, and a zigzag. 3, 1, 2, 3. Zigzags down. WX, YX, Z. Into minor Y, intermediate 2. That's the best I can do for that. Now, there is the possibility that we've got another expanding diag down here. Another. It seems to be all the rage nowadays. So let's just consider the possibility here of looking at this differently. So 1 into 2. Right? 3 would be longer. What we need to know is that if 4 is the 5th down is longer than that swing there, and it isn't. So we can't get a legitimate diag down there unless we're only measuring our fibs in log scale. And then we've got to look at the depth of the 2 relative to the depth of the 4. Okay, 4 would be deeper, would not be anywhere near as deep in linear. Unless it works out in linear and log, I'm not interested in entertaining it, because you're just taking your pick, and everyone who's got a reason to disagree with you can take the opposite side of the argument. So I won't entertain it as 5. I can't entertain it as an impulse, right? Because it overlaps, and it starts with 3. It starts with 3. It's not a diagonal. Okay, I can't make it work as a contracting diagonal for the 3-way swing. So here, although it looks really nice, this is longer than this here, so it doesn't work as a contracting diagonal. So I've gone over everything there, guys, and it just wants to divide as a bunch of fucking zigzags. That's just what it wants to do. So I'm not arguing with it, I just don't like it, but it's just what it is. It's just a whole bunch of zigzags. So I could either look at this as another set of swings of 7 as opposed to 9, or look at it as 5 like I've done here, or I can look at it as a maybe WXYXZ rather than having a WXYXZ subwave of a Y. Blah blah fucking blah. Right, all of that's kind of a moot point because we're going to look at a bearish interpretation before we go as well, but Either suffice to say, that's the best I can make of the correction. Okay, well it's not. It is the best I can make of it. I do have an alternative, but let's just go over that quickly then, shall we? So here's the alternate idea: 5 down into an A. Here. A, B, teeny tiny C into A, W, X, Y into B, C, D, E for a triangle, which looks like absolute garbage. And then 1, 2, 3, 4, 5 down for a C. So your choices are subdivide, swing low, swing high, this as a single swing, and this as a single swing, right? And take this as a triple zigzag, or try and force into here a triangle, which really doesn't want to be a triangle. Okay, there's your options. I think I prefer it just being a bunch of annoying complex zigzags. So anyway, moving on, let's come down to the shorter time frame here and look at what we've got. Another leading expanding diagonal off of the low. 3 waves into 1, 3 waves into 2, 3 waves into 3, 3 waves into 4, 3 waves into 5. Huge C wave here in the 5, which results in a massive extension and a throw over of the upper trend line of the 1 and the 3. It's not typical for an expanding diag, but we can live with it. Okay, and we've got 5 longer than 3, 4 deeper than 2, 3 longer than 1. We've got everything we need for an expanding diag. It just doesn't look very good. Whatever this is, honest to God, haven't got a clue. Haven't got a clue. Probably a bunch of zigzags again. Either way, point being, we get this wick right back at resistance, support, right back at major support. We get this wick. We get support off of the low. We have what looks like an impulsive move, and we've discussed the short-term trend. Okay, short-term trend that we want to see: 1 up, 2 back. We can look to enter, and we're looking to break this downward trend in a wave 3. A, B, C, 1, 2, 3. Okay, that's how the short-term swing looks. Now, it could be wrong, and it could break down further from here. Okay, that's possible. But I just wanted to bring it to everyone's attention that we've come back to a major support level. Okay, with some serious confluence and other forms of geometry, and there's a random inverse fib, and we've got this huge piling of levels going on here. Now if it does dump from here, shit could get ugly. Okay, right, I think we all know that could happen, and we all know how ugly it could get. But I think, having come back to this major resistance, we should really consider taking that bullish candle and just running with it and trading it, at least in the short term, and just protect yourselves and don't do anything silly. But you get my point. Volume increasing into this low, and I just find it interesting that we've come straight off of there. So before we leave, let's leave on a bearish note, right, to cheer everyone up, and let's have a look at the worst case scenario as I see it. We're still in a correction. The correction was not, the move was not 1, 2, 1, 2. The move was 1 into the 2018 high, 3 waves into a W, 3 waves into an X, 3 waves into a Y. Now you can take it to here as well, 3 waves into a Y, and ignore that subwave if you want. It really doesn't matter, does it? It just doesn't matter. Either way, the whole point of this secondary zigzag, be it a double or a triple, subwave or WXY to here, which it could be, the whole purpose is to push beyond this low. That would be the whole point of it. It doesn't have to go far beyond it, but it would make sense if it at least went for something beyond this low. So that would bring us below 11 cents. What is there below 11 cents? Well, really, a big gulf of nothing. There's a little bit of support. You could argue at a prior high here back in 2013. So we fall into this little zone here. But volume gets a little thicker when we come down into this prior high, because we've got this little demand node here. It's only teeny tiny, but it is a little bit of demand. Right? Demand zone here. And we got prior high where we built support off of. This was resistance, we built support off of it. This brings us all the way down to 2 cents, 3 cents region. So that opens up the trapdoor. It really does. So if we want to be super bearish, that's our region, that's our target, from 11 cents down to 3 cents. If we break the current lows here that we're at, I can't see it as being anything other than quite bearish. Now there is still the possibility, right, for as long as this low is intact, that what we're doing here is a continuation, and we just come maybe down into the point of control, maybe into all of this noise here, right, and then that's 1 and that's 2. I would still be backing that for as long as this low is intact down here at 11,487. Okay, now I've got that as bullish invalidation. Let's just bring that up. Sorry, that's local bullish invalidation. Long-term bullish invalidation is this level down here. So let's shift that to invalidation point, and let's put a number on it. 11,487. I said this was going to be a short one when I've gone rabbiting on for God knows how long. Either way, short-term invalidation 0.28704. Long-term invalidation 0.11486. Take out this low, trapdoor opens all the way down to 3 cents potentially. Right? No point guessing or figuring out or trying to figure out where or why we would stop. We would stop when we stopped. Likely area here, prior support levels here, maybe, who knows. But either way, take out that level 11 cents, 487, and you open the trapdoor to much lower pricing. Rally from here. Okay, we are looking to break this downward trend and start the move up. That could be 1, 2. Right. Alternatively, break the local low at 0.28704, and we're looking for the current correction to continue lower, but not taking out this invalidation point here, and therefore moving higher. I just realised I just accidentally deleted that thing, so let's put it back. Okay, so there you go, guys. That is XRP. That's how I see things on the long term. That's how I see things from a classical analysis point of view. That's how I see things from a Elliott wave view, as best as I can put across. So, if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron, there's a link in the description box below. Follow it, head over, have a read of various tiers, and feel free to sign up at your leisure. We'll be glad to have you. Right, guys, all the best, and I'll be back with you as soon as I can. Take care. Bye-bye.